The information in this podcast is current on the day of recording. It is general advice only and does not take your personal situation into account. It may not be suitable for you. Participants in this podcast may also own the stocks discussed. For a full list of current recommendations and stocks owned by staff, members of Intelligent Investor can visit www.intelligentinvestor.com.au.
Welcome to Stock Take. My name's Gaurav Sodhi. Joining me in this first remote Stock Take is analyst James Greenhouse. Welcome, James.
Well, it's all a bit strange, but yeah, we're doing well. Hello, Gaurav.
He's there. That's two of us. Okay, let's see if we can get the third guy. Welcome, James Carlisle. Are you there?
I'm here, yes.
Yes. Okay. Phew. Okay. We'll have to let everyone else know that it took me about 20 minutes to get set up, but we're all up and going. This is the first podcast we've ever done with the three of us in different locations, scattered all over Sydney. And we've got someone organizing us all. So there's four of us doing this very simple activity of just trying to have a conversation. It's tells us something about the age we're living in.
Tells
Gents,
us something that we find it so hard.
yes,
I mean,
That's
I think there's a
right.
lot of people around the world doing this at the moment, and it's not that difficult.
I
There's
don't
no
know.
visual cues. That's the problem for us. We're usually in the same room together, so there's visual cues, but it's all a
Yeah.
bit difficult when there's you can't see each other.
Well, I found the technology hard because usually everything is integrated into your computer. So a Skype or a Zoom, you just press one button and it starts. But this is a lot of wires and fiddly things. Gents, we're recording this on the Monday. Already this morning, there's been several new capital raisings. This seems to be the new stage of the crisis. We've gone through the panic and the falling equity prices. We're now at the stage where businesses are coming back with capital raisings and plans. Our buy list is the longest I've seen it in years, if not ever. And I feel as though people are coming to grips with this being here for several months at best. So the question for both of you, and JG, perhaps we can start with you, is what now? What do we do now that we're sitting here with a huge new buy list, with a changed world and ideas falling out of the sky?
I think we're possibly going to have different views on this, but to me, I've changed my view over the last few weeks. I actually now think this is not the time to necessarily rush in. You have time. There's no rush, but I think the important thing is to act when necessary quickly. So for me, I think this is going to take a while to unfold in the sense of the opportunities that may present themselves. So there's no problem with buying things that are on our buy list. We're happy with that, but be aware that there may be some capital raisings coming, as you've seen this morning, and that you need to keep a little bit of cash aside for those, and also for potential opportunities that come as as the economy really falls off a cliff. Because as we've seen, I mean, there's the economy. We've only really seen a couple of weeks of low activity, and that's probably going to continue for a little while now, certainly in some of the most affected sectors. So for me, you can buy things on the list, but I don't think there's any need to rush in straight away.
JC, James, you've actually done the complete opposite. You've come in pretty quickly and bought some of your favorite stocks very early. How are you feeling with that decision, and would you do that again?
Well, I wouldn't say I bought them very early. I mean, I bought. I
Or you
mean, I've
bought them
been.
cheap, but
Well, I think that the point I would make is that you don't want to go all in suddenly on a Monday morning. The thing is to take it slow. I think I agree with JG that there's no great rush, but I do think that you do need to keep sort of ticking along. I mean, if assuming you have some cash to invest, you sometimes you've got to force yourself a little bit to do that because it can all seem a bit scary, and you're never going to get the bottom. But I think that that our buy list shows that there are more opportunities than there were, and I think it's right to be taking advantage of them. So with some of the things I've bought, I haven't got the bottom in anything yet. Who knows if we've even reached the bottom? But um, I've been doing largely that. So I've been topping up things along the way. I mean, I still have sort of emergency reserves that I could put to use, but I would prefer not to do that unless we were, a good 20% cheaper from here across the market. So in case of absolutely crazy opportunities, I've got a little bit left, but otherwise, I'm sort of fairly much in. Yeah.
it's hard to find those. I find that the best opportunities are the ones that do come with the most uncertainty, the ones that make you feel terrible as you're pulling the buy trigger. And it's only really in hindsight that we realize that they're wonderful opportunities. I bought. I've instituted a trading rule, so I now force myself to allocate cash at least once a month, and I've done it twice in March. And if I haven't done it um, at all, then I sort of just close my eyes and do it, because I think the uh, what I learned from the GFC was what you buy almost isn't that important. I mean,
Yes.
obviously, you got to buy. You can't buy rubbish, or and it does matter. But what matters more is just putting money in the market when it's universally low. I mean, there's so many opportunities. I just don't think we need to be as selective as we usually are. The important decision here is to get money in the market, not really be cute about where you want it to go. And so I've got this rule where I'm forcing myself to allocate money at set periods of time. And I haven't wanted to do it at all. I've been actually feeling very quite nervous about this whole thing. It's a medical emergency mixed with a financial crisis and a great, really deep recession. And I don't really know how this is going to end, and I don't know how bad it can get. But those uncertainties are precisely the causes for great value. And so getting money in is the important part.
I
But
actually
if you
think
were
that's
going,
really
sorry, go on, Jeji.
Sorry, I actually think that's really sensible, Gaurav. I do it a slightly different way, but I think that's an excellent way to do it. Is that for me, it's more about if there's a particular stock drops heavily. I mean, there's been a couple of days in the past month where Lavisa, for example, fell 15% and fell 20%, and it kept
Yeah,
doing
there was a
that.
day where it
Um,
halved in one
that's
day.
right. I think you
Yeah.
you bought in the $3 range.
Yes.
I bought a little bit higher. But I mean, there's those days where the market is really collapsing, and there's been a couple of days where it's been down 5% or down 10%. I do the same thing as you. I force myself to buy those days, and you're right. It's very uncomfortable. You feel oh, this is terrible, but it's actually the right thing to do. And as James said, you may not get in the bottom either, but it's yeah, to almost force yourself to buy during these periods is actually, I think, a great strategy.
But what you're doing there, JG, is you're being stock selective there. I mean, so on the day that you bought La Visa down hard, 50% or something. I mean, the market was only down 5 or 10%. So um, I mean, I agree with the sort of discipline of just sort of, sometimes you have to force yourself a bit because psychologically it's difficult to put money at risk. Um, but I do think it's right to be stock selective. You still got to keep that value focus, and you've got to try to work out what's rational and not rational. And I actually think that in this sort of situation, it's a little bit harder for us than normal because we're sort of long-term investors. We focus on what sets a company up well for the long term. But what we're facing right now is a short-term dislocation of uncertain duration, um, and the liquidity impacts of that. It's something which is very hard to weigh. And you can see the market doing that with certain stocks, selling them down. And I think another piece of advice is when you see a stock reaching into extreme value, um, you've got to reckon that there's probably a capital raising coming. The
Yeah.
market
Yeah.
sees those things ahead of times, and I mean that's not a reason not to invest, of course. But I suppose it emphasizes your point, JG, that you can afford to be patient in a lot of these cases.
And the market has been very efficient at working out where the capital raising is going to come from, and they're the stocks which have fallen quite heavily. So I think we've talked about this before, James. Is that yeah, you the market has gone straight for the companies that have a lot of debt. It's gone straight for the retailers. It's gone straight
Mm.
for the REITs. It's gone straight for the shutdown affected companies. All those ones that are going to have a liquidity crisis or
Yeah,
that have a lot of debt, they're the ones the market's saying you need to raise capital, and they'll almost be forced to.
it's the sort of short term thing that the market actually does very very well. And
Yes.
so when your advantage is on the long term, you can it can leave you a little bit exposed, but you just got to try to think things through, and move gradually. I think not sort of suddenly throw all your money into something and roll the dice. Just buy in chunks, as John Addis I think wrote in one of his updates a little while ago. Don't worry about the increased broking costs at a time like this. A few pennies here and there isn't going to make much difference.
It's really struck me how efficient the market is. I guess we tend to, I mean, if you're a value investor, you almost by default have to think that there's periods of inefficiency in the market. Otherwise, our job pretty much doesn't exist. But it is hard sometimes to locate those inefficient pricings, even in a big panic and a big crisis. It's interesting that the market has been correctly selective about what to mark down, and things that haven't been affected haven't been marked down. I mean, look at NextDC, for example, or Macquarie Telecom, which are two businesses that may actually benefit from this. I mean, they NextDC has raised capital, and the price actually went up. That it's remarkable that even in a panic, not everything is falling. I remember the GFC was different. In the GFC, just everything fell no matter what happened. This is not that case. So I do agree that patience is important at this time, but I also think that you can have too much patience, and it's very comfortable and easy to say wait and be patient. But I still would disagree slightly with both of you, and I think this is actually a time to hasten the deployment of cash. And I'm not saying be impatient, but certainly you want to be closer to being greedy here. And I've certainly been ready to deploy more capital. I've actually changed my portfolio holdings a fair bit, and I've sold a lot of things that I'm less comfortable with, or are less high quality. And I'm now dribbling consistent rounds of money into stocks that I know really well, or ones that present better value. So maybe that's a great segue into what we're doing in our own portfolios, gentlemen. JG, what kind of strategy are you following in your personal portfolio?
I suspect this will be different for all of us, and because I run a family super fund which has my parents who are fairly elderly now and require income, it's slightly different for me. So I think you've been being a bit more aggressive than me. I actually have more cash now than I did a month ago, and the reason and what the source of that cash is, I've sold a few companies that I think are currently benefiting. So Coles is one I've sold a fair chunk of, and I'm still keeping some of that because I still think it's a good business. But I think in terms of the fact that it's been holding up quite well, it's worthwhile using that as a source of cash for better opportunities. And also, I had a listed investment company which I had a fair chunk in just as a place for parking cash. So I've used some of that cash, so the cash from those holdings I've been putting in some of the things that have been more worse affected. So I think it's in these times as you want to buy quality, but you also need to buy the things that are getting really hit. And so for me, that's been things like Sydney Airport. I think most of us have bought Sydney Airport. Some of us prefer Auckland. I bought some Lovisa, as I think I've mentioned earlier. That's not the highest quality business. I think we all need to acknowledge that. It was a good retailer at the time, and I think it'll be a good business down the track. I think it'll survive, but it's certainly not the highest quality there. Otherwise, I'm actually waiting a bit, as I've alluded to earlier. I think there's going to be a lot of capital raisings coming out, and we're seeing some of those now. And I think you can really afford more, in my view, and this will be different for all of us. I'm happy to wait for some of those opportunities and actually buy some of those capital raising companies down the track as they come out with their capital raisings, because I think that tends to depress the price. So for me, as I said, I have a bit more cash than I would normally, and that's partly because I actually think there's going to be some opportunities come down the track. And as you know, as I think two of you have said, you need to be careful here because you don't want to be caught with all this cash in case the market sort of swings up. But my personal view is it's probably not going to swing up quickly. There's going to be some pretty good opportunities that come out in the form of capital raisings over the next few months.
For those capital raisings, JG, are you making sure you have a small stake in companies you're interested in to take advantage of share purchase plans, or are you waiting for capital raisings and then buying into a falling share price?
It varies. So I recently bought some Tabcorp, and the pure reason why I bought that is because I think it's going to need to raise capital, and I want to participate in the share purchase plan. But in some sense, I don't think you necessarily need to do that. I mean, Webjet's one I'm interested in. I haven't fully decided on that yet. Maybe we'll talk about that at some point. There's companies that are actually already been hit by capital raisings. I think you can also buy those. You don't necessarily need to wait for. You don't also necessarily need to be in the stock already. I think you can wait for those those to come out. So it is on a case by case basis. So there are some that I think will be interesting. A Centre Group I think might be interesting. I've been considering whether I buy some in that and wait for the share purchase plan down the track. So there are some. I think you can wait for the capital raisings. I suppose I don't think you need to, but there's also you can also buy a select amount if you think you could get a chance in the SPP.
JC, how about you?
Yeah, so as I've said, I think it's important to invest gradually in chunks. But where I perhaps differ slightly from JG is that I wouldn't necessarily be saying, there's plenty of time and you can afford to be patient. Quite in that sort of sense. I think it's interesting to note that we had a development session with our former research director Greg Hoffman the other day, and we were sort of talking in those sort of terms, and we were all sort of saying that we were keen to keep a bit of cash, and that was actually exactly the time
Yeah.
when it turned out afterwards that was exactly the bottom of the market so far. So who knows what's going to happen? Um, but the market's always going to. I mean, at that point, it was really gloomy. This was what, a week ago. Was it? Yeah.
2 weeks
Was
ago,
it
wasn't it?
2 weeks ago?
Yeah.
Monday. Yeah. And it was very gloomy at that time. And the market can and will turn on a dime. It'll be sort of just the faintest glimmer, and you'll see a bounce. I mean,
Hmm.
who knows where we'll get to before then? So
But it's
I
stock
think it.
specific, James, as well. Sorry to interrupt. It's stock
Oh yeah,
specific.
yeah.
So you, so
Sorry.
you can. So yeah. So I agree the market may rise, but there may also be stock specific opportunities that don't rise with the market for the time being.
Yeah, look, I accept that as well. I mean, look, so stocks which are going to raise capital, if you're confident that they're going to do that, then it's hard to believe that there's going to be a good opportunity. I mean, better
Yeah.
than when they actually do,
Yeah.
especially if you've already got some shares in them, and so you need to hold some back to participate, because otherwise you get diluted. So I accept all that. So. In my own portfolio, I suppose. I mean, I invest effectively off an offset mortgage, so the amount can go up and down fairly fluidly. But there's a point at which I'm uncomfortable going beyond, and I suppose I've added about 50% to where my portfolio was a few months ago. And I've probably got about another 25% to come, but only in extreme circumstances. I don't want to, I'd rather that's eating into my comfort zone, as it were. So that just gives an idea of where I'm at, I suppose. I mean, I probably have gone a little bit early on a few things. I went too early on Sydney Airport, I think now it seems, and it's interesting actually. I bought Sydney Airport and Auckland Airport the same day, um, just I think it was the day before we both countries announced 2-week quarantines for international travelers. So that timing on that wasn't perfect. But also, I think it was a mistake to buy both airports because for diversification purposes, I think one's plenty. And in the end, I actually sold Auckland Airport, so I'm out of that. Um, and so the rest of my purchases have really been focused on quality. That's sort of my byword at times like this. So I've topped up Altium and Ordinate and Seek. I've started a position in Zero,
Oh, that's interesting.
um, which it hasn't fallen a great deal, but
Hmm.
it's fallen a bit, and I think it's a really good stock. And so perhaps not quite such quality, but I've also bought some Webjet. So that's the most of my. Oh, and I finally sold my kangaroo plantation and timber. Jeez,
Oh, yeah.
that's it. Those
For a while,
fires
that was
seem
the
like,
best performing stock on the
yeah,
market.
well, it was. It seems like a long time ago.
Mm.
Those fires, but it's funny because I only got 90 cents. I don't know how much people follow that, but look, I got a pretty poor price for that. In normal times, I would have held on, thinking because the circumstances they're in now, they've got a bit of cash, and they're probably not so bad. But you've got to weigh that up against the other opportunities that are appearing. So so I decided to take the hit on that, and it gave me a bit of cash to put to use elsewhere.
So, a question for
Whilst
both
settling
of
up,
you.
yeah.
JC's probably answered this to some extent, but would you say that now is the time to target those really high quality companies that you've always had an eye on? And I guess on that list, JC, for me, Altium, REA, and maybe Seek and Zero. Those are companies I've always coveted and I don't hold any of. Is now the time to target those, or would you rather use your capital to go into those really heavy hit businesses, things like Lovisa, Sydney Airports,
I,
and Centre Group?
I guess it's a balance, isn't it? And you don't want to have you wouldn't want to have a five stock portfolio all in extreme risk and with a lot of debt and in the travel sector. And so having a list of high quality names gives you the scope to maybe have two or three more speculative situations. I've also increased my diversification. So normally I run a fairly focused portfolio, sort of normally around 8 stocks. But that's increased to 11 now. So, and that's a conscious thing to try to, and partly that's why Sydney Airport, that was a new stock for me. And so is Webjet, a new stock for me. And so I'm just consciously just trying to increase the diversification because there's plenty of scope for surprises here. I think the other point I'd make is about debt. So some of these quality names do have quite a lot of debt, so they're perhaps not quite as safe as you might think. I suppose Seek and Sydney Airport would be two on that list. I'm very much more comfortable with the likes of Zero and Altium. I mean, the risk there, of course, is over their valuation, but they seem to be holding up pretty well at the moment.
I
JG,
must
same question.
have quite a different view on James to this, and and I don't think there's any right answer.
Mm.
And this is something I want to get about in the next section. Is for me, I am buying the things that are more. I'm naturally attracted to things that are more bombed out, and that may be a risk in the current situation with these heavily debted and liquidity issue companies. But yeah, I struggle with buying those. I agree with quality. I think we need to all stick with quality, and we're going to have slightly different views on what is there. They need to be relatively big, durable businesses. But in terms of buying these, I suppose what you might call high multiple stocks, I'm probably not interested in those at the moment. I think that the bull market that we had up until February 2020, I think that's now gone. And those high multiple stocks that really, really did well during that market over the 5 and 10 year period, I think you need to be careful because I think they're probably not going to be the sort of stocks that do well over the next 10-year period because they were already starting with high multiples. So personally, I prefer the more sort of bombed out quality and the things that are more risky, maybe you might put at the moment, but I think in terms of the valuation risk, I think the valuation risk of the zeros and and certainly Altium is more interesting to me now. But the valuation risk of the zeros and the Altiums to me is now that those stocks are probably they're certainly there's a lot of value at the sort of more value end of the market, which is sort of the more James Hardys and more Adelaide Brighton, which I started looking at recently and published something on Friday. To me, that's sort of more where the value is now. It's in those sort of really bombed out stocks and those sort of ones that have held up quite well. I think to me, if I owned them, they would be more. They would actually be sources of sale capital for me. I'd be more interested in selling those.
So
And
I mean I hear what you're saying, James, but I mean I think we're this time it's different. Those are famous words, aren't they? But I think at the moment we've got a bunch of stocks which it's the old platform concept, and these stocks which have established strong platforms. I think they demonstrate quality and they can also carry on growing at a particular rate. It gives me confidence that they're going to grow uh, a long time into the future. Whereas in the past, if you'd looked at a high revenue growth stock, you'd really have been looking at a fairly, or there's a risk you'd have been looking at a more short term phenomenon. So all I'm saying is that I think that in some of these stocks like Zero, that growth I think is you can forecast it out more comfortably for longer, and that's why of course they've done so well the last 5 years, um, and I think that still that fact still remains. So. But time will tell. But so I'm so most of these stocks when I look through my portfolio, the Altiums, the Ordinates, REA, Zero, Seek. I mean, they're all platform type stocks, and I'd be careful of paying a high multiple for something that wasn't. So
that's interesting. Certainly, if you look through historical routes, the companies that led the previous bull market don't usually lead the subsequent bull market. It's
Correct.
usually a rotation of new stars that rise up. So historically, JG, I think history's on your side, but I do see JC's point, and something is different this time. These very large platforms, and we've got some here, smaller platforms here, but you look at overseas and those big platform names, those things are like nothing that have come before them. And I think there is an element of this time it's different. So I probably sit somewhere between the two of you, and that is neatly on the fence because I do not know.
It's a good place to be.
Yeah, yeah.
Yes.
I've also got an eye on what happens after this passes, and I think now is the time to start thinking about what the world looks like um, after the crisis ends. Are you two thinking about that at all in terms of investing and in terms of change behavior, or do you think it's too soon to start doing that? And now is really the time for survival. JG?
Yeah, I think that's actually something that's only really I've started thinking about the last week or two. I'm, I was I think that the tendency in all these situations to think, oh, it's all going to go back to how it was before, and I think we're all guilty of that. And certainly, we all think, oh, the stocks that did well last time will be the stocks that do well this time, and it's all going to be. This is only a pandemic. It's going to be over in 3 months and we'll be back to normal. And I think I'm changing my view on that. I actually don't think that's necessarily going to be the case. I think we need to look at some quite different ways of the way of traveling and how traveling might work, and that's something that's really only been worrying me in the last few days and is informing my views about how I look at the travel stocks now. So yeah,
Can
so
you go?
I
Sorry,
started.
can you go into that a little bit more detail, just as a segue? What do you mean? You don't think people are going to travel in the same volumes as they have in the past?
I think in the long term, what worries me is that by Christmas, for example, I just don't think that people are going to be um, over the fear of the pandemic, and
Mm,
that we may be in situations, for example, where traveling internationally may not be possible for quite some time, in the
mm,
sense that you may international governments at borders may require you to say, oh yes, I've had the vaccine whenever that vaccine is ready, or they may require you to say, oh yes, I've had it, I've had the antibody test before they even let you in the country. So I'm just worried about that, as well as all the fear of traveling. It just worries me that the cruise industry, for example, is dead, and we don't have any cruise companies in Australia, but we
yeah.
have companies that sell cruise products, like the travel companies. I just worry about that. So, I mean, I haven't worked through all those issues personally yet, but I'm actually a bit more worried about some of those things that may never be the same again. And I know we've always got to be careful, because you're influenced by recency bias, and you think, oh, it's the pandemic is terrible and so on. And we all know that things do pass and it does change, but I think there may be some things that don't, and that's perhaps one of the things that worries me at the moment.
I'm not sure I agree, because I don't see young people anyway having a lasting fear from this. I mean,
Mm,
after the peak, the pandemic peak in a lot of the particularly European, North American countries will start coming down the other side. And I think the crucial thing is the lockdowns. And once the lockdowns are released, I think that there's nothing going to stop young people wanting to travel.
mm,
Uh, I think more vulnerable people might want to stay locked down a bit longer. I think that they would be wise to do so. That's what I'll be recommending to my parents. But um, I think that young people, I think they understand that the risks to them from this virus are very low. And I think that once the lockdowns are removed, they're going to be traveling. And I think that once we're the other side, the herd immunity has been reached, which I think will happen before there's a vaccine in most countries around the world. I don't see that we're going to get a vaccine soon enough to help with that process. But in a year or so's time, let's say, and transmissions of the virus are very low, I think people will see that. And I think that, I mean, there have been risks to going on cruises for a long time. And everyone knows you got to. I mean, everyone knows you got to wash your hands a lot on a cruise ship, and I think that people will do that. That said, I think that there's an awareness now that there will be. We've been very lucky for 20, 30, well, 100 years to avoid a serious pandemic. And I think there's now a greater awareness, and I think that travel companies will carry more cash, certainly for a little while.
Yeah,
That's
look,
the weird thing, isn't it? Flight Center, everyone thought it was pretty safe, and yet
Mm.
it's been proved that actually no, they can't. They had a what you would call a bulletproof balance sheet, and yet suddenly they need to raise $700 million in cash or whatever it is. It's quite incredible.
Yeah, I think I probably agree with JC here a little bit more. JJ, looking back at previous large scale pandemics, and we've had actually more than I realized. I saw a chart of just how many pandemics have killed lots of people in the 20th century, and there's a whole lot of them, starting with the famous Spanish flu everyone's been
But
talking about.
nothing like the Spanish flu or this. This is easily the next worst after the Spanish flu.
Yep, yep. But there was also some really serious ones. Like I'd never heard of. There was a big flu pandemic in the 50s. I'd never even heard of it. Even the swine flu, 10 years ago, whatever it was, I barely knew about that. Um, I just don't think these things will impact people who are most at risk, and that's why I think the cruise industry is almost finished because their main clientele were older people, and I think they're going to be much more cautious, and that industry is the economics require very large volumes to make it work. I just
But
don't
if
think
there
that's going
isn't,
to survive.
but sorry to cut in, but if there isn't a circulating, pandemic,
Yeah,
then why would you not get on a cruise ship? I mean,
I think
Yeah,
people are
you
still going
you
to be
can
scared.
well, really? I mean,
Yeah.
it would be very irrational. I mean,
Oh
the,
no,
you,
it's
you can
perfectly rational
well, no,
because
I
the
don't see
alternative is
that.
death because
No,
the
but yeah,
mortality
but
rates are.
people can see whether there's a pandemic in in progress. I mean, people get gastro on cruise ships. People get all sorts of things. They get flu on cruise ships, and that hasn't stopped them going in the past.
Yeah.
And I think that, I mean, sure, there's the risk that there's another pandemic, but you can see a pandemic coming. We've been a bit slow off the mark with this one, of course, but I think we'll be quicker off the mark with future ones. I think people, when they start hearing about these things, will stop going on cruise ships.
I'm not sure that's the
Unless and until
calculation
then.
though. I think the calculation is just people probably realize, or it's been brought to their attention that these activities are much riskier than they thought they were, and I think
But
that
only
just
during a
that.
pandemic.
No, no, no. I think
no,
I think it'll permanently change some behaviors, and
yes.
cruise ships I think are at the top of that list. And I actually think I'd be surprised if in 2 years' time, 3 years' time, we still have a viable cruise industry. I think it's going to have to look completely different than it does now.
I'd be astounded if we don't.
I'm
So
happy to take that
there
bet.
we go. Two to 3 years. All right.
Yeah, we'll come back and see.
We'll shake hands on that when we next see each other.
Unless I'm
Yes.
wrong, and then we will just conveniently forget about it
Yeah. Right.
on the
Well,
podcast.
but I think, I mean, I hasten to say 2 or 3 years, let's say, but two
Yeah.
or 3 years, I'd be astonished if there wasn't a cruise industry operating at least, say, 70-80% of what it is now.
I mean, we have some glimpses of what the other side looks like by looking at China, and it looks as though people do return on the streets pretty quickly, and normal commerce resumes almost the same as it used to. I don't think China has fully opened up its transport, so it's hard to see what the travel arrangements look like, but
But
they
this is 2 or 3 months, not 2 or 3 years.
Yep, but it's the closest we have. So I think we need to just infer from the evidence we have. China has been slow to open up air travel, and I think air travel is particularly vulnerable in the short term. So I think it might even take a couple of years before air travel is normalized. But in 5 years, I'm sure people are traveling in the same frequency and volumes as they were last year. I'd be surprised if air travel didn't in 5 or 10 years' time wasn't larger than it was in 2019.
Yeah, I mean, air travel is economically very sensitive, isn't it? So,
Yes.
I mean, if we get a big recession out of this, then that's going to have an impact there as well. But again, I mean, once the lockdowns end, I mean, people, I mean, I think older people and vulnerable people are going to be more circumspect, and quite rightly so. But people, and younger than me, I mean, I'm beginning to get up into the risk categories. So I'm talking about sort of 20s, 30s. Um, uh, I don't see why they're gonna. I mean, once the lockdowns end, once
Yeah.
they're able to fly, once they're able to go
Yeah.
backpacking around Europe, I think they will.
Yeah. No, I agree with that. Yep. What about I find that At the moment, I've been trying to buy just plain paper to get the kids, drawing and coloring, and everything you try to buy on an online store is almost sold out. I've tried to buy puzzles, sold out. I think everyone being forced to shop online for a period of time. Surely, this just puts another nail in the coffin of physical retail. JG, you and I have both expressed interest in Center Group, um, and we both own a couple of retailers. What's your thoughts on what retail looks like on the other side?
Yeah, I think that's a really good point, Gaurav, and that worries me as well. And probably particularly worries me from the point of view of the supermarkets is that this is actually forced plenty of people who never shopped online before to actually shop online. And not only is the shopping online lower margin for the supermarkets, but they might have trouble meeting the demand coming out the other side of this. So there's some quite big risks there. So yeah, I think we need to be aware that these big events often do um, they force changes that were already afoot. They actually force them and make them
Accelerate them.
amplify them, I suppose.
Mm.
So yeah, so it does worry me. And I think there's probably the companies that were particularly at risk of online cannibalization, I suppose, are probably going to be even more so coming out the other side of this.
And one thing I've learned is that if you're buying online from most traditional retailers, the experience is horrendous compared to a business um, that's built for an online experience. That it's just so
Absolutely.
much better. So I buy contact lenses, for example, on an online only store, and there are a couple of places that offering online that have physical. It's a completely different experience. Ditto for things like anything groceries or shopping related. If you're trying to buy from Coles and Woolies, horrendous compared to Catch of the Day or something like that.
Well, I can offer an anecdote on that because I bought some things from recently from IKEA and Bunnings,
Right.
and the delivery slots for them were sort of months away. And so I opted for click and collect.
Yeah.
They were claiming contactless click and collect,
Hmm.
IKEA, um, and so it was probably foolish of me to go over there yesterday morning, Sunday morning, but it was actually contactless, but it was social distancing was being put to put to a lot of trouble. It was a throng round there. I was there for an hour. They brought out the wrong stuff twice. It was absolutely chaotic. I then went to Bunnings, and there was a queue of about 100 meters, which of course everyone 2 meters apart, so it's not actually as big as it seems. But they then said there'd be a further queue inside, to go to the customer service to collect your click and collect. And I wonder what the point is of click and collect if you've got to do all that.
Yep.
So I turned around. It was time for lunch, so I turned around. But that's I think that's right with these sort of physical store businesses trying their hand at online. It doesn't go so well, does it?
JC, what about you?
Yeah.
Are there particular industries that you think are going to look very different? The other one that sprung to my mind, just commercial and office real estate, that can't look the same as it has in the past, surely, when everyone is now working from home. What are your thoughts?
Well, I think what everyone's highlighted so far. I mean, certainly retail. I think that you will see things that were being disrupted by online anyway. I think that you'll probably see that accelerate. So that's certainly retail, and but I would say to a much lesser extent the commercial office. And I think the point I would make is that I think that the severity of the impact from this is going to be less than I suppose some are thinking. So I reckon that in Europe they're beginning to get over the peak of this,
Hmm.
in Italy, particularly, and Spain maybe. And I mean, in the US, there's a lot of nastiness to come. Of course, I mean, in all these countries, there's still going to be a lot of deaths after the peak. So, but I'm feeling that lockdowns in the northern hemisphere probably it's beginning to look also as though this might be very temperature sensitive. So they reckon that it transmits much better in between 5 and 11 degrees. So as the weather gets warmer up there, I think that transmissions are going to get much less, and I think that they're going to get a bit of they're going to be able to release the lockdowns anyway. So I'm thinking that probably the lockdowns in the Northern Hemisphere end after 2-3 months. Maybe late May, optimistically. And I'm not sure if that's really enough to make massive changes that we're all sort of talking about. So I mean, it's very sensitive to that, isn't it? If we're all locked down for 6 months, then then I think it will have a big impact on working from home and off commercial real estate and all that sort of thing. But if it's six weeks to 2 months, much less so, I think. And I think that's the way it's beginning to look for the Northern Hemisphere. We got a problem here because of we're moving into winter. So if we remain locked down until June, July, and then August, July and August is peak flu season, and that's going to be when the temperature here is better for this thing to transmit. So we've got a slightly more awkward situation in terms of the length of our lockdown here. My personal view is that we should be really relaxing measures at the moment urgently, so we can let the business do, let the economy do something for a couple of months before tightening up again, perhaps in June. Anyway, so I think it's probably less severe. I mean, we're a small part of the world, so I think globally it's probably slightly less severe than feared. But there are clear sectors that will be impacted for sure, but not cruises.
All right, gents, having gone through a fair bit of detail, let's try and distill some advice for listeners in a couple of points. So perhaps in one, two, or at most three top tips, what is the best way to get through the current situation? Wherever you learned that's working for you, and if you want, what should you not do? JG, why don't you start us off?
Okay, my first tip, it seems obvious, but I just think it needs to be reiterated because there's going to be some people out there who are feeling pain. We're all feeling pain. The point is, don't sell. It just worries me that there are times where, and we all feel this. I think it was the 23rd of March when the market was down 10%, and it felt like there's a depression coming. You think, oh my goodness, I've got to get out and sell everything. But the important thing is you need to stay the course. If you have a decent portfolio, it doesn't mean you can't tinker around the edges, but do not sell. I always recall Greg Hoffman, our former research director, which we talked about earlier. He said that he had a call from a member in March 2009 who said, "Oh, look, I can't cope with the market being down 50%. I've sold everything," and of course that was the bottom. And I just feel terrible for that person. And they clearly would have they would have missed the massive upside that then came over the course of that 6 months. So that to me is my first thing. I know it seems obvious, but just even when it's really tough and you're really feeling down, do not sell out of because you're worried. You need to keep in there and remember that stocks are a fantastic way of increasing wealth over the long term. So my second tip, if you're happy for me to go into that, Gaurav,
Yep, go ahead.
is be flexible. And this sort of goes to what I was saying before a little bit. I think is we get a lot of queries about CSL because it's been such a fantastic performer, and people think, oh, I want to buy CSL, and it's come down, whatever it's come down now, 10% or 20%, not very far really. But be aware that the stocks that you wanted to focus on, in the bull market, 3 months, 6 months, a year ago, may not be the best opportunities now. There may be better opportunities now, and there certainly are. Our buy list is a lot longer. And things like sort of James Hardie that you may not have considered before, or some of the more sort of cyclical stocks, that are now looking pretty cheap. Be aware that they may be the best opportunities in this market. And I know James Cutler is going to disagree with me on that, but yeah. So I just be flexible about the sort of stocks that you're looking at, and think that the ones that were the best opportunities in the past may not be the best opportunities in the future.
Maybe I'll actually, but JC, why don't you go next?
Okay, well, I'll start straight away with where JG said I
Yeah,
might
that's
disagree.
right.
I don't really disagree that much. I think everyone has different ways of finding value, different focuses, and I think flexibility is a good thing. Quality, in times of uncertainty, quality tends to be my fallback. But the key point I would make is that you just need to keep your focus on value, and that's always the case. But it's at times like this where you've got to remember it. and that's how you tell whether opportunities are appearing. The other point I'd make, well, I got three. So the second point I make would be to buy in chunks. We've already said that. I mean, buy gradually,
Yes.
and so finally, I'd say you repeat that you do have to sort of make yourself do that, or at the very least, as JG has said, don't capitulate. I mean, and what I've written it down in my notes as don't get too bearish. It's very easy when you read all these headlines, and headlines, remember, are designed to invoke fear. That's what gets us reading stories. They always look terribly scary. Also, the past experience from pandemics has been that the fatality rates sort of tend to start high and then get lower. We've already seen that to a degree in this one, but in the swine flu, I think they started off estimating fatality at 0.1% to 5% or something. I read recently in the early stages of that pandemic, it ended up undershooting that by five times at 0.02%. So um, there are ways that this can be not as bad as the headlines are telling you. Certainly economically, I mean, and in terms of the share market. So be careful not to get too bearish and focus on value.
Nice. So my top tip is just to get money in. I've said before that I'm not advocating hang on, let me do it again. So my top tip is to just get money in. There's a time for being ultra selective in what you buy, and we should always be selective to a degree. But this is a time to prioritize getting money in over being super careful and selective about what you're buying. Because I just think there are so many ideas here. Even by chance, if you just get money through the door, you're going to you're going to stumble upon something that's a good buy. And our buy list is the longest it's been since I can remember. So there's no excuse really for not getting money through the door. And I completely agree that you want to do it in tranches, but the point is you just want to do it. This is not the time to clam up and be scared and fearful and not to deploy capital. The whole point of investing, the reason it works over the long term is if you are able to deploy capital at times like this, because you can actually set yourself up for decades of return if you get set in a time like this. So I think it's really important to get money through the door.
Absolutely.
The other point I'd make is that with so many opportunities available, and I find myself in this position, I'm kind of get distracted by, oh, that's cheap and that's cheap and that's cheap and that's cheap. And there are so many things to look at. You can have the intention of buying a whole lot of stuff and never get around to actually buying anything. And so I've tried to deal with that problem just by buying the stuff I know the best, even though it may not be the cheapest or the best stuff. Just the stuff I know really, really well. I just feel comfortable deploying capital in companies I know well, and I've been doing that. Um, that's what gave me comfort in buying Lovisa on that day where it halved. I put a bit more money into New Hope Corporation, and I put a bit of money into Auckland International Airports, which I've been following for some time. I think buying what you know is a good way of overcoming fear, and if you can do that, you'll end up doing point number one, which is getting money through the door. And the third point is I don't think this is the time to buy the single best quality stock you can find. I would actually advocate leaning into the pain here. There are decent enough businesses that have been sold down really heavily. We all know what they are, and we all know all the sectors that are hurting the most. I think now is the time to focus on those sectors and buy the stuff that's been really beaten down. It does come with much more fear, a lot more pain, and difficulty in actually pulling the trigger. But if you're able to get to actually buy something, then buying something that's been beaten down and truly unloved is probably the best bang for your buck at this point. And I've been trying to do that as well. So that's it
You're a
for me.
sensible man, Gorev.
Well, one of my earliest memories of coming working at II is JG saying, feel the fear and do it anyway. And JG's
Yes.
voice just rumbles through my head, and much like JC's does every time I eat a piece of meat.
I think I mean what you say about leaning into some of these badly affected sectors is not I wouldn't necessarily disagree with that. What I would say is if you're doing that, you'd probably need to have a broader diversification. I mean, I suppose perhaps I
Yeah,
shy away from that sometimes because I run quite a
yeah.
tight portfolio. So if you're buying more speculative situations, then you
Mm.
probably need to have more of them.
Although you can argue about how speculative Sydney Airports really is. I mean, I don't think your equity
Oh,
is going
I've
to
got that on my
go to
quality
zero.
list.
Yeah.
Yeah, I mean, could raise capital, but as we saw from Auckland Airport this morning, if it has to raise capital, there seem to be plenty of people happy to provide equity to airports.
Now, gents, we're going to try and do this weekly, so expect podcasts for the next little while to be on a weekly basis. If you have any requests or questions, feel free to send them in, and we'll see if we can get to those as well. But for now, JC, JG, thanks very much for joining me.
Thanks.
Thanks, Gaurav. Thanks, James.
And for everyone else, thank you for listening.